I made two links in the forum. I made a subcategory, okay, which is this here, and I want you to use this subcategory. Originally, I didn't make this subcategory, I just made this post, but I want to organize things a little bit better, so I made this subcategory. So for all information, you come and click on this subcategory. Forget about this link. I'm going to be erasing this link by the end of today, okay? So click on the subcategory. I'm going to be putting sessions here for March, April, May, June. They're all going to be listed under this subcategory, okay? So there's going to be different categories here. And you can click here and follow it, okay, to make sure you get updates for each month. Okay, so make sure you follow this category here so that you get any new posts, any new categories that I create in this subcategory, you get them. And then follow the subcategory so that any new classes or sessions that I put into that category, you get it, okay? It's important. Okay, so when you click on February, you'll see a link for February's classes, but I forgot February 10th is Family Day, so I removed that from the schedule. So I had to create a second link. So there's two links to subscribe to register. This one, most of you have done. Only a small handful of you have registered here. So after class or during class, whenever, come here and register for that class. I'll give you access to these other sessions that we're going to do, okay, on the 17th and the 24th. Very good. All right. Can we start now? And also, I put the CFTC data there because there was no report that came out this weekend. All right. But I am investigating ways to make the spreadsheets available to you guys on the website. So I'm working on a way so that you guys can go to the website and have access to the spreadsheets so you can see what it looks like and run through the history and do all that type of analysis, okay? I'm working on it. Just trying, I found methods to do it. I just got to find out what's the best method to do that. Okay. All right. So we're good. We're back. Let's start. Bring up this folder. DDD. There we go. That's what I want. And that. All right. So CFTC data. This has been something that I've been tracking for a very long time. And it all started years ago when I went to Online Training Academy, and my professor, instructor, whatever you want to call him, he mentioned the CFTC data. And I was like, all right, what is that? Oh, it's the positions of the largest institutions. First, we learned that the largest institutions are the ones that move price. I'm like, oh, bonus. Okay, what else? And they also report their positions to the CFTC, so we get to see what their positions are. And I'm like, okay, that's incredible that they're basically giving us their positioning. We could see what they're holding, then we should be able to trade well. Because if you have supply and demand and you understand supply and demand and you know what their positions are, you put those two together and it should give you everything you need to know. Well, yes, for sure. In many, many, many circumstances, not all circumstances, but in many circumstances, it'll give you everything you need to know. If you know how to interpret the data, number one, and if you know how to understand the supply and demand dynamics that are playing out. If you know those two things, then you can do extremely well. As I have over the years, you could do very well. But if you don't understand those two, you're in trouble. And if you take if you pay attention, you'll notice that the data is recorded on the Tuesday, and Wednesday, Thursday, and then Friday comes, and then that's when the data is released to us. So a lot of people are like, oh, but it's delayed. The information was reported 4 days ago. It doesn't matter. It doesn't matter. So just use your brains and realize that the data was reported 4 days ago and look at the charts and see what they did 4 days ago. I mean, it's not very difficult, right? Just think logically. It doesn't matter if it's delayed. It doesn't matter. They take months and weeks to move a position. So what do you care if it's delayed 4 days? Who cares? You can even use this data for day trading. People are like, no, you can't. It's delayed. The data came out 4 days ago. See, people don't know how to think. Instead of saying, no, you can't, why don't you think about how you can? There is an explanation. There is a way. You just have to think. And there is definitely a way. It's all about knowing the storyline of price. If you don't know the storyline, you're in trouble. Wait, we always talk about this. What is the storyline of price? It's like watching a movie but having no idea. It's like watching a movie in a different language, right? You can visually see what's going on, but you have no idea what the storyline is. You have no idea what they're saying, where it's going. How could you know where it's going if you don't even know where it's been and what they're saying? If you can't understand what they're doing, how can you understand what the future is? Most people have no idea. They're watching movies in different languages and they have no idea. So because they can only visually see, but they can't understand and they can't hear, they can only visually see. What they do is they buy books that teach them visual patterns, and they try to match those visual patterns with what they're seeing in the TV show. And this is what they call trading. It's a disaster. Imagine watching a movie in a different language. You have no idea, but you have a book that says, if you see two people are talking to each other and they're very close, then most likely they're going to kiss and then they're going to have a relationship. And they're likely going to get married and then maybe even have babies. So if you see a man and a woman in a church and they are very close together and there's a priest there, they are likely going to get married. That's the same idea. No, people would see the ridiculousness in that, but when it comes to the markets, they don't see the ridiculousness in it. So when I study the CFTC data, you have to understand that I'm like, watching a television show. Back in the day before there was streaming, you'd have to wait a week until your show aired again, right? Let me just take a sip of water. But all throughout the week, depending on how much you like that show, you'd be thinking about what's been happening in that show, how it's been building up, where the cliffhanger was, and how you're waiting for that next show to start. And so what happens when that next show begins? You sit down and you're watching it and you're like, all right, last episode, I could have sworn that that person was about to do this. Let's see if there's any signs that they're about to do that, right? And you watch intently, and you're watching for those signs and you're looking, and you're adding what your experience is of the show to the previous episodes. And there's a storyline that flows and it adds. Every new episode comes out. When the data comes out, it's a new episode for me. It's a new show. It's a new episode continuing the storyline. And if it's completely way off track, has nothing to do with the last few weeks and the storyline that it's been presenting to me, then something is wrong. Then that means somewhere along the line, my understanding of what's been happening in that show over the last few weeks has been incorrect. But I've gotten really proficient at doing this, and I don't usually find myself shocked or surprised. There are times where I can't follow along the storyline because, well, let me rephrase that. It's not that I'm not following along. It's that the storyline that's being presented is leading you to a situation where there's a fork in the road, and it could either go left or right, and it's not very clear which way it's going to go. So I need the data and I need the supply and demand dynamics to help me to determine what direction it's going to take. So there's times where there is no solid direction and we're kind of like in limbo. But the important thing is it tells us a story, and we use the data to continue telling us this story. And when the story is telling us, oh, they're getting ready to shoot price up higher, and then we see new demand zones being created on the chart, maybe that's a good spot to go long, right? When we see not only are they accumulating a position, but they have a long ways to go until they reach their max size, that means I can accumulate and I don't have to worry about this momentum stopping anytime soon. I can get in with low risk now because there's lots of room to the upside, so I can slowly accumulate a position. So there's so much information that the data gives to you, right? People are like, how do you day trade on it? Well, if it's jumping off of a weekly demand zone and we've got a lot of room until max size on long positions are being hit, and you can see them accumulating, and long positions are above their average size, and off of that weekly demand zone, there's a 2-hour momentum shift or a 4-hour momentum shift taking place off that weekly, and it's retracing to to the 4-hour demand zone that's created the momentum shift. You can look at a 15-minute time frame, find a zone off of that. And now you're using the CFTC data, which gave you the storyline, which gave you the understanding that price is likely going to go up and on what time frame it's going to play off of. And then you narrow it down to a smaller time frame. That's how you can day trade using this data. But you see, people, their brains don't think that way. That's why here I've always tried to push this idea of thinking, the logic that you need to apply. You need to open up your mind and see the possibilities, because it's all right there in front of your face. Everything is there. Everything for you to be successful as a trader is right there. They handed it to us. They've made it so easy. The only thing is they were so sure nobody was ever going to put in the time and effort to be able to sift through this and really get these nuggets out of it. And, you know, most people can't. So that's what we're going to focus on in these sessions. There is no one video lesson I can send your way that's going to make you be able to interpret the CFTC data. It doesn't work that way. And those that, you know, think that it works that way, you've only been tricked by those people that are selling those courses and saying, if you watch this within 3 months, you'll be a good trader. It's nonsense. Can I send you a video lesson for you to become a good doctor and then you're doing surgeries? No, you can't. You got to study the body. You got to study a lot of things. You got to put in a lot of hours doing these things, and then you can become a surgeon. There's no quick way to learn this. So in these study sessions, I'm going to lay out for you what I do, okay? I've been working on this process for years, and there's nobody more passionate about the CFTC data than me. I don't care who it is. Nobody's more passionate with the CFTC data than me. I put in so many hours into this stuff. It's crazy. So this spreadsheet that I made, as you can see on this main page, the first thing I created was this snapshot, because I wanted to be able to have a snapshot of all the positions, you know, long, shorts, total sizes, what percent of those positions are long, what percent of those positions are short, and what are their net positions. If you take longs minus shorts, what do you get? Because I want to know, right? If the banks are long and they're also short, I want to know, well, what are they, net long or are they net short? And then commercials, I add commercials, but I know that they do the opposite. So I look at their information and I pretty much reverse it, because I know that they do the opposite. So why am I going to be focusing on that? I'm going to take both non-commercial and commercial, and I'm going to look at it as so if it's negative, I'm going to look at it as a positive. If this is a positive, I'm going to look at it as a negative. This is a negative here, I'm going to look at it as a positive. If this is negative, I'm going to look at it as a positive, because I know that they do the opposite. That's why I track commercials, just to flip it. So I like to see what the difference is. Okay, so you notice how, you know, the US dollar was positive for non-commercial and it was also negative for commercial, but look at the difference. Okay, it's a positive number. Why? Because I take this as a positive. So it gives me a good understanding of what both commercials and non-commercials are thinking about the dollar. And their positions are 29,000 to the positive side. What was it that the previous week? Because isn't it important to look at what we have this week and match it to the previous week, just to see what the last week's momentum was, right? Just to give us an idea. What did they do over this week, right? Because remember, I'm watching a TV show. You know, when you watch a TV show and right at the beginning of the show, they're like, previously on the CFTC data, and then they show you this happened and that happened and then that, right? It's just to give you, you know, a reminder of where we were. So when you start watching the episode, you know where we last left off, and we can continue. In my mind, I know where we left off last week. I know if I left off with questions in my head, or I need to see proof of something, or I was thinking to myself, oh, they're definitely going to take more of their short positions off. For sure. Because that's the only logical thing they could do if the storyline is correct, what I've been following along for the last 3 months is correct, I'm sure it is, because I've only been seeing evidence to support it ever since I came to the conclusion of what was taking place, they're likely going to be taking more profits. So when I put in the data in here, I see that right here in the difference column. I see it, right? Previous to the difference from the previous week and from this week, and I see the change here. That's what I meant to point out, the change, okay? This is what it was last week. This is what it is this week. This is the change. Bearish. Bullish for the Aussie. Bearish for the US CAD. Bearish for the US Swiss. But you see how it's not that much? Those numbers, right? For the US CAD, US Swiss, Euro, they're not that much. The change isn't that big. You know what that tells me? The banks aren't focusing on those pairs. What I've learned from years of studying this data is that the banks don't always move every single asset at the same time. They hardly do that. They focus in on certain assets. First, they'll focus on the euro, the pound, US CAD, and then 2 days later, the Aussie, the US dollar, Japanese yen, the Kiwi will follow along, for example. And it's been a great way of forecasting moves in the market before they even happen. Because when you know that certain assets are correlated and you see one of them being moved, then you know the other one is likely going to catch up and move. So you look here, I look at this information, I'm like, which ones are not in play? US CAD, US Swiss, Euro, not in play that past week. Up until Tuesday of last week. That doesn't mean the last 4 days it hasn't been in play. That's a different story. Only looking at the supply and demand on the charts can tell me if on the last 4 days the banks have been interested in moving price. The data can only tell me what it has been up until Tuesday. And that's important because I looked at the price up until Tuesday to see what was happening. And if I concluded they're not really focusing on price, and then I put the information onto the spreadsheet and I see these change numbers are very small, then I know I'm being validated with my thoughts. I'm always coming to conclusions and processing data in my mind and coming to conclusions. And then I let the movements on the charts and the data confirm my thoughts. And if the data and the supply and demand don't confirm my thoughts, I think some more. What is up with my thinking? Am I wrong? Or is the logic that I'm applying wrong? I don't like being wrong. I'm always trying to be right. I'm always trying to be in line with reality. I don't want to be disassociated from reality. If you're disassociated from reality, you're going to lose. Most traders are disassociated from reality, so the only way that they can trade is by trading patterns and trading probabilities. Oh, it's likely going to do up. It's likely going to go up. Why is that? Well, because it created a bullish formation. So it's likely going to go up. Can't you see? Bullish engulf, likely going to go up. Yeah, to where? I don't know. Maybe close the gap and then down. I don't know. Just I look at my chart. I look at my book, chapter 14, bullish patterns, and it says bullish engulf. They don't know context. They don't know what charts in play. They don't know how to read the COT data. They're lost souls. I don't know how most traders trade, but some, have intelligence and have some logic, and they can apply it in their own way, and they're able to get something out of it and trade well. But I like to be in tune with reality, okay? Because you could build upon this logic, and your skills will be fine-tuned greater and greater. And you'll just understand the market better and better. Every year I do this. I mean, I see vast improvements every quarter in my trading. Every quarter. Where, maybe your average person, I couldn't even say that because it depends on what the average person is looking at. I know traders who've been trading for years and they're still like break even. Well, why? Well, I'm not surprised when you're using, price patterns to trade, you're not tuning into reality. So how can you build up some kind of wisdom from false information? You can't. The whole purpose is to build up wisdom. The whole purpose is I put time and effort into studying something and I become wise. And I'm able to plan trades, and those trades are profitable. And I am able to sleep at night. The peace this buys you cannot be bought for money. There's no 3-month course, no quick video lesson that can buy you this. It's time and effort, and there is no shortcut. I'm sorry to say there isn't. And that's why a lot of people have joined the school over the years and they're like, oh my God, this is way too hard. This guy down the street is selling me a course. 3 months, I'll be a pro. He promises me 3 months. I'm going to try that. You know, if you studied philosophy, you wouldn't even need to waste your time going through the 3-month course guide, because you would already know that that person is not being honest with you. If you study philosophy, you know what it takes to acquire wisdom, and there's no shortcut to it. And anybody promising you shortcuts is a liar. So you wouldn't even waste your time with stuff like that, because you'd be like, that person's lying to me, because there's no such thing as a 3-month course. But those that are afraid of work, they say, oh, but gosh, it's got to be a way, man. You know, if I'm sick, I go to the doctor, I take a pill, it's all good. Right? There should be a quick fix for everything. I want entertainment, I just turn on my TV and boom, it's there. I want to talk to my aunt in Idaho, I just open up my phone and boom, 1 second later. Yeah, but that's not how the real world works to acquire knowledge. There is no quick fix. It has to be acquired over time. The good thing is that I have information I can pass on to you that is based in truth. So this is already going to zip you through the line. You know, when you go to the theme parks and you have the long lineups for the roller coaster, and then you have the special pass that brings you right to the front of the line, you're being brought right to the front of the line. Those other people are waiting in a long lineup. They may not even get to the ride. By the time they get to the front of the line, the park might be closed. You know what I mean by that? By the time you finally get some real true understanding about the markets, if you're not following truth, you may be an old man and not even wanting to trade anymore. But here, you're being to the front. You're being brought right to the front. Here's the information. Here's what you got to do. And you don't have to take my word for it. The beautiful thing about teaching truth is you never have to take my word for it. I will drop bombs. I will drop knowledge. I will show you things, give you insight. But when you do the work on your own, you're going to be like, holy, this guy, what he said was true. Let me just look for a random situation in the market that Kevin doesn't know that I'm looking up. And let's just see if what happened, like he says, happens 95% of the times. Oh, there it is. Yep, it happened. Yep. Just like he said. So I look at the change column, like what's in play, what's not in play. Well, these pairs are not in play. What about the pound? Yeah, big motion. I start asking questions. Why was the pound moving but the euro wasn't? See, I think about these things. You don't have to go into all these details and think, but I do. And this is what I study and look at when I'm writing the eurusd report. It's a way of putting down my thoughts in writing so that I have a record of it. I look at US dollar, Japanese yen. Ooh, big move there. Kiwi didn't do anything. Kiwi and Aussie are usually tied together. They both didn't do anything. I'm not surprised, because if Aussie doesn't do anything, usually Kiwi doesn't do anything either. Gold, not big move. Silver, not a big move. And copper, not a big move. But oil was a big move, bearish. S&P 500, bullish. Okay. The NASDAQ a little bit, Dow Jones hardly moved, and bonds were bullish. So right away, I'm, tapping in to what is happening, what has happened over the past week, and relating it to what has happened. That's the first thing. Very important. And then once I just ponder that, I'm like, oh, so this moved, that moved, those ones didn't. I'm just crossing things off on my list. I was looking at the euro, I was looking at the pound, I was looking at the situation with the Aussie. I'm like, Well, if you recognized, if you watched the latest video I did on YouTube, it was this one right here, Accurate Forex Market Outlook. If you watch this video, you'll see that I was giving you an idea of where the Aussie was when it dropped, and now it was basing, right? Same thing with the uscad, it rallied and it was basing, okay? I told you the circumstances that we currently were. So when I look at the data, I'm like, well, based on those circumstances, does this information match? Or is it telling me something's about to happen? Okay. Once I got that information, I plugged this data into the sheets that contain all the historical numbers for all the major currency pairs. Look, okay. What can you do with this? Oh my gosh, so much. You can go back in history. You can go back in time and look at the times where the cells were really red, meaning they were aggressive with their position. And I go back in time and look at the charts. What does it look like when they were aggressive with their position? Why was this aggressive and this was cooled off? What was the situation? I've done these studies. I've looked because I wanted to know. There's no book for me to read to teach me the truth. Okay? There is no Bible of CFTC data. There can be books called the Bible of CFTC data, but they're not based in truth. From my perspective, at least, that's my perspective. When you follow truth and recognize it for yourself and see it validate your logic, the logic that you apply, and it's validated week after week after week after week after week after week. Nobody could ever come to me and say, I've got the book, man. This is the book of the truth. Nobody could ever say that. I wouldn't even pay any attention to it. Because when you know truth through the work you've done, why do you need somebody to come into your life and say, no, this is the truth? You know, I've been interested and I have skimmed through some of those books. And to me, it doesn't come even close to what we're doing here. Not even close. Most of them tell you to look at the commercials, and I'm like, well, that's weird. If I wanted to throw somebody off, I'd tell people to look at the commercials. Otherwise, I wouldn't tell people to look at the commercials. So why are all these books telling people to look at the commercials? I don't know. I don't know. I don't know who these people are. I trust nobody. Okay. In this world, I trust my wife, my children, my family, my innermost friends, and nobody else. I assume, and it's not that I have a distrust in people, it's that I understand that people's knowledge is very limited to their ability, want, and will to study. And most people's ability, want, and will are extremely low to study. So that means the information that they contain is very small, very little, very ill-informed. So that's why I don't trust people, because, you know, I don't know your background. If I've been studying somebody and they've come to prove to me that their knowledge is based on hard work, you know, real study of the subject, and their logic is correct, and the logic that they've applied in many circumstances has turned out to be correct, then I build trust in them because I know that they do the right thing. But most people I don't trust. I don't trust my doctor. I don't trust my naturopath. I don't trust anybody. I don't trust my dentist. I know more about dentistry at times than my hygienist. I go for a tooth cleaning and I'm instructing her about Dr. Weston Price and the findings he has made in his book. You know, it boggles my mind. If I was a hygienist, I would have read all those books. I would have known everything about, but that's just me, right? When I dig into something, I want to be as informed as possible in that. So when I took on trading, I said, I want to be the guy that knows more than anybody else. It was a big undertaking, but this is what I decided to do. When I took on the understanding of the CFTC data, I said, I want to know CFTC data better than anybody else. And so when you want to know something better than everybody else, you don't take on everybody else's misunderstandings. You just start from scratch and you start learning. So you don't have to start from scratch, but I've done that, and that has been my process. And the reason why I'm sharing this with you is so that you understand what it took for me to get to this information that I'm passing on to you now, okay? Because for you to trust this information, you have to know where it came from. How did I put it together? Where is this coming from? Did I just dream it up? Did I just pull it out of the air? No, this was a lot of years, a lot of hours I spent away from my family to come to understand these things. So the coloration of the cells, super, super important. We have basically 3 colors that we deal with, and variations of those colors, obviously. But we're dealing with blue, we're dealing with red, and we're also dealing with white. Ooh, can you see it? Can you see it? Can you see it? We're dealing with 3 colors. Blue, red, and white. What does blue mean? I picked blue because blue to me signifies, you know, cold, right? Blue is cold. So that's what that's the color that I picked. Cold. Let me make this better for you guys. How about that? How about I just do this? Whoa, lots and lots of zones. Look at that. All right. Blue. Red. And white. Oh, beautiful. How about I just write white in a different color, like gray? How about that? Okay, so you guys can see it. All right, so what does blue mean? Blue means and represents positions being cooled off. Why do I care about if they're cooled off? Well, you better care, because now you're starting to dig deep into the thinking of the institutions. So when I studied the data, I was like, what do I need to know about the data for me to be able to predict the movements of price? I need to know what? What do you need to know? I need to know if they're focused on that currency pair. I need to know if they're building a position. I need to know if they're offloading a position, if they're moving, if they're about to move price really aggressively. I need to know so many different things for me to be able to figure out what's going on. All right, so 3 things that I need to know is whether or not the banks are even focused on a long or short position. I need to know that. Are they even focused on a long or short position? Because if they're not, there you go. If they're not, then the coloration of those cells are going to turn blue. They're not focused on these positions. So that immediately that tells me something. So you ponder it, you think about it. Why wouldn't they be focused on those positions? Well, there's many reasons. You can come to many conclusions about why they wouldn't be focused on a long position, for instance. Why wouldn't they be focused on a long position? Because they're accumulating a short. Why wouldn't they be focused on a long position? Because they're offloading a short position. There's 2 reasons right there. But how do you know which one it is? Well, context. Context. If you look at the chart and you look at where it is on the chart, what supply and demand zone is it contacting, then you start to understand context, okay? And it starts to paint a picture. Remember, there's no book that's going to come out every week and tell you exactly what's going on. That's the eurusd report. I'm providing you the book. But when I did this, there was no book. So I had to get the answers. So I'm showing you how I got those answers. And I'm showing you what tools I created to help me get these answers. The coloration of the cells is a major part of me understanding where we are in the storyline. So if it's red, that what does that tell me? That's telling me that the banks are focused on that position. The more red it becomes, the more aggressive, the more focused they are on that position. The less red, the less focused they are. Why would it go from aggressive red to less red? Profit taking on positions. If longs turned really aggressive red and all of a sudden they start declining, maybe profit taking on long positions. But it depends. Did they get near a maximum size? Ooh, now we're starting to think. Or are they far away from maximum size? If they are, why would they be reducing long positions? So these are questions that, when you see the data, go into your mind, and then you got to look at the charts and come to a conclusion about it. White. What is white? Why is white important? White tells you if the positions are at a default size. What does that mean? What's your default? Your default is 0. You usually have no position. Every once in a while, you'll open up a long position and then you'll close it. Or you'll open up a short position and then you'll close it. But your default is no position. The banks don't have a no position in the default. They always have a position. When you look back to the CFTC data, you'll notice there's always positions. Why? Because they're the market makers. Their job, apparently, is to provide a market for us. So that when we want to open up a long position, they are at our mercy to take on that position, the opposite side. But we all know they're not angels and they're not creating a market for us. In fact, they're luring us into taking the opposite side of their positions, right? It's like how they say, oh, a woman's job is to make the man feel like he's deciding things on his own, when really she's secretly pulling the strings and, encouraging him to make those decisions, right? Well, that's the banks. The banks make you feel like you're making decisions on your own, but they're really not. You're really not making decisions on your own. They're really luring you to make those decisions, right? You can see it all around us. It's not just in the markets, it's in everything. Unless you're a free thinker and you have your own beliefs that are separate from what the banks tell you should believe, then you make your own decisions. I try not to get lured into making decisions of the banks. So why is it important to know what their default? Why is it a default? Well, because when they're blue, when positions go into blue and it's really cooled off, they're intentionally making it so that they're reducing their positions by a massive amount. They're intentionally doing that, okay? Because their default size is not 0. So when their positions become very little, it's not that they're inching towards default. They're intentionally removing so much of their long position. So that's not default. Default is when the coloration of the cells turn white. That's the balance point between red and blue. How genius is that? Because we can look at all the historical data, at least the data that is relevant, because you don't want to go back to the 80s and 90s sometimes because their position sizes were so small. We need to be relative to position sizes of today. So when we go back to, let's say, 2005, for instance, that's a lot of data. It's 20 years of data. We can see what their blue size was, what their red size was, and what the white size was. White is telling you this is their average middle. This is their average middle size for longs since 2005. That's important because that is their default size. That is their position that they like to remain at before they think either way about it. that they want to accumulate it or they want to reduce it. Okay, so this gives us a lot of information. These three colors give us a lot of information. So when you look here, you see, where's the whites? We had a little bit of white here, a little bit of white, a little tiny bit of white here. But what else are we seeing? We're seeing blue, blue, little bit of red here, little tiny bit of red here. Okay, tiny bit of red here. Okay, but otherwise, this is giving you, right? We know what blue means, that they don't want to have a position. They don't want it to be aggressive. So they reduce it to a very small amount, a lot lower than their average size. They were doing that from September to mid-December. So we're already starting to see a picture here. And you know, when you sit and ponder, I do, when I sit and ponder and think, what other reason would they reduce a long position until it's a position size that's very cooled off? What would be the reason for that? And I think it through and I come up with different possibilities in my head. So when I look at the data, I'm like, it happened between September and December. And with these possibilities in my head, I go and I look at the chart. And I look at what it's doing on the chart. Is it reacting from demand on a higher time frame, medium-term time frame, small time frame? Where were we on the storyline? And I try to match the two. And when I start matching things, I start building up possibilities of what is about to come based on these matches. So I'm looking at this and I'm like, they're very cooled off with long positions, but recently they got a little bit aggressive and then they took the gas pedal off and then they went again, then they took the gas pedal off. Where are we at right now? They seem to be neutral across the board, longs and shorts. Okay, I mostly focus on non-commercial when I do this type of analysis. I just focus on the coloration of the cells with non-commercial. Now, I've told you this over the last several months that the dollar chart has been very disassociated with the rest of the market. Okay, so when I came to conclude that, I don't usually focus too much on this dollar data to give me any inclination of what's going to happen, because I mean, they're all these assets are all connected at the bottom here. They're all connected. All these guys. They're all connected. They're all characters in a storyline. And they're like gangs, you know. The Aussie, Kiwi, they're in their own gang. One goes one way, the other one follows. USCAD, US Swiss, US Japanese yen, they're in another gang. Wherever one goes and leads, the other one follows. Sometimes the US dollar Japanese yen is the leader, and wherever it goes, the other ones will follow. US Japanese yen goes first, and you know what? It's likely this one and this one's going to go next. So you have to discover who's the gang, where are the gangs? Euro and pound, they usually go together. Wherever euro goes, US dollar goes opposite. So which one's the leader of the gang this week? Which one's the leader of the gang this month? Oh, pound seems to be the leader. Let's see where he's going. Where is he in his storyline? So I can determine if the euro is going to move in the same way. You know? So looking at the coloration, knowing if you should be focusing on a certain chart or not, very important. So since I know the US dollar is not the greatest one to be following along, I don't follow it. I don't pay too much attention to it. I go to other ones that I know are more in play. Like the euro, for instance, okay, or the pound, or the US dollar Japanese yen. The yen has been a perfect one. with its aggressiveness and where price was reacting to when it was aggressive. I mean, we've called the moves to perfection. You know, if you've been with us and a member with us long enough, you know, I don't need to tell you how we called these moves to perfection. The move down from here, the move up from here, the move down from there, and the move up from here, okay? With incredible accuracy. Just by looking at the supply and demand, knowing the storyline, and looking at the data. The data was the biggest tell. The data was the biggest tell. And that's when I came up with these clouds that you see on my chart. Because I'm like, how do I take what I see, the aggressiveness, the cooled off, the default, how do I take that and visually place it on the chart so I can see it? And then I came up with the clouds. I said, well, you know, how about I just use these dark clouds whenever they're aggressive with long positions? But, and when they're not, there's no dark cloud. But at the same time, I need to know when they're just focusing on long positions. Why would it be important to know when they're just focusing on long positions? Well, because they're not always accumulating a long position, right? The coloration of the cells can tell us when they're exiting out of default. If default longs were 100 and maximum longs were 150, you have the space between 100 and 150. So if default positions, they start moving up from default to, let's say, 105, 110, now 115, we know that they're in an accumulation phase of a long position, right? Because they're above their default size. Once those positions are above their 13-period average, that's another beauty. Their 13-period average right here. What's that? That's just comparing the latest positions with the latest 13 period of their positions. Latest 13 weeks. I take the latest 13 weeks positions, add them up, and divide it by 13, and I get a position. I get an amount. Are there longs above the 13-period average? Something's happening. They're accumulating. Are they below it? They're distributing. But just because they're distributing a short position doesn't mean that they're not in a short cycle anymore. The short cycle incorporates them accumulating and distributing. Okay? The cycle means they're focused on it. That's all. Cycle means they're working through that position. If they're in a long cycle, that means they're working through longs. They're accumulating a long, it's above default position. Okay? And I want to know that. When they're aggressive, you see the coloration with the dark cloud. Dark cloud means they were aggressively accumulating there. And you can see when they're aggressively accumulating what happens with price. Price moves up. When they aggressively accumulate, what happens? Price moves up. When they're no longer aggressively accumulating, what happens? Price drops. Okay? And as you can see, there's still a green cloud around here, just not a dark one, meaning they were offloading. They were still focused on longs, but it was not an accumulation of longs. It was a distribution of longs. So they were focused on it, okay? Same thing with the reds, the red color, the red clouds. When they were accumulating an aggressive short position, this is what happened. What happened? Price dropped, because that's what happens when they accumulate a short. But you can also see that there was a red cloud here, all throughout here. What does that mean? When they first started accumulating their shorts through here, that's when the cloud started. There was a focus on shorts. When that position became aggressive, that is when we labeled it so on the charts. And so you see the big aggressive move to the downside. And then it ends down here because that's when they started offloading their short positions. But you still see a red cloud around here, just not a dark one, because they were still focused on shorts. It just was a distribution of shorts, not an accumulation of shorts. Okay, so that's what these clouds represent. They're a representation of what's happening with their positions. Accumulation, distribution, and if we're in a cycle where the banks are focusing on those positions. Very important. Okay. All right. Like US dollar, Japanese yen, we look and we see aggressive. Then they weren't so much, but then they were again. We look at longs, they were cooled off. Why were they cooled off? Well, you can study the charts and you can come to conclusions about it. Why would they be cooled off? Because sometimes when they're so aggressively with shorts, they don't want to hold a long position because they're like pushing price down really low. When they're ready to accumulate, they will, and then we'll see it. Somebody's saying that there's no sound. Can you guys hear me? Yeah, I see that you guys can hear me. Okay, good. All right. So coloration of the cells, white, blue, red, okay? On the long and short columns, you'll see aggressive or not aggressive. You'll have bearish, bullish, and neutral, okay? Long and short percentage. Based on what percentage their positions are long or short, is that a bearish signal, a bullish signal, or a neutral signal? Okay, this column will give us a lot of information as well. Because sometimes long positions will be greater than shorts, and yet it'll be bearish. And you'll be like, how can that be? Well, think about it. Just think about it. How could it be? If price just dropped aggressively, their short positions would be huge. So if they're starting to become bullish and they start to accumulate a long position from being cooled off, then the coloration of the cells could turn green, because it's all relative to past positions and what it has been. Okay, so the coloration of the cells are going to show you some green, even though shorts are a bigger position, because it's telling you that they're bullish based on what positions have been recently. And people don't understand that, but it can give you that indication. I've seen that many times throughout the years that I've been doing this. Okay, the only thing is you never want to just look at this this data and say, oh, they're bearish. Because look, it's 50-50. It's 50-50 right now, but look at the coloration of the cells. Is it more green or more red? It's more red. 50-50, but there's a bearishness in there. Why? Well, because it's relative, comparing it to what it has been. Okay, you never want to just look at this data and say, oh, they have more shorts than or look at this position and say, oh, they have more longs than shorts, so let's go long. No, you never want to do that. People are always looking for indicators. Just I want a spreadsheet that says buy. I want a spreadsheet that says sell. I want a spreadsheet that tells me take profits. If you want that, you're going to have problems. I've made a spreadsheet that's really good at giving you an indication, and I would love to one day come up with a really simplistic system that says, you know, if price is hitting a monthly or weekly demand zone and we get long positions going above 13-period average, just buy it. And sell it when long positions start to decline from or surpass the 13-period average, and then when they start to decline below the 13-period average, offload the position. I would love to actually try that out one day and see how accurate it would be. And I bet you it would be very good. I bet you would be accurate. Because so many times when I do historical data analysis and I look at the previous positions going back, 10, 15, 20 years, and I look at the supply and demand dynamics, damn, does it ever give you such good signals? When they're about to accumulate along, you see it in the coloration. When they're about to distribute it, you see it in the coloration. So I'm sure there's a simplistic way of trading using this data, but you'd have to really work it through and come out with a real solid conclusion about that. And I haven't done that. So, and I don't trade like that. I couldn't trade like that. I just would not feel comfortable like that. So I use this spreadsheet as a tool to give me an indication of what's happening, where the banks are at, what are they focused on, what are they not focused on, are they accumulating, are they not, are they aggressive, are they not, are they bearish, are they not, within what context are they bearish. I do all that analysis. I compare that. I've made these visual markers on the chart so I can remember where we're at in those cycles. I put these little markers down here: distribution within bullish cycle, accumulation within bearish cycle. Okay, that means they're focusing on longs, but they're offloading them. Down here, accumulation, they're focusing on shorts and they're acquiring them. And all these things have to come together and give you a solid understanding of what's likely going to happen. If they go against each other, they clash, and it's not giving you a solid, clear storyline, then you sit on the sidelines and don't trade. Because it's not always going to give you a perfect story. There's times where it'll just tell you, no. Remember when price was up here? I know that the circumstances were that it just removed a weekly demand zone, or supply zone, sorry. And it could either pause and continue higher or pause and drop. So what did I say? Well, look to see over the next few weeks to see if they're going to start accumulating a long position. And what has it been instead? Distribution. So what does that tell you? Drop, right? There's no way I was just going to jump to conclusions and say I'm going to get into this and just assume it's going to go. No, I wait to see if it's going to give me what I need to see. If they were going to continue pushing price, they would have added to their longs. They didn't do that, so they distributed it, and now price is dropping. It makes complete sense. When you add everything together and put everything together, it makes complete sense why it's moving to the downside now. All right. I think this was a good first class. I think it was a good first class, laying out the details, where I got this information from, why did I put it together, why did I make it, so that it showed me colors, why did I choose these colors, what information is it giving me, okay? I think this is a good start. So take this class, watch it again, take some notes. It's important because in the future classes, I'm going to be asking you guys to be looking at the data and coming to conclusions about it. I'm trying to get you to do thinking, okay? It's one thing for you to come and join this class and just sit there and stare at a screen and have me talk and give you information, but you're not going to accumulate knowledge by just listening to me. It doesn't work that way. You need to apply what I'm saying, and you need to do it. And when you do it and you focus and you concentrate, you're going to start to see things. And if you see the wrong thing, that's fine. That's part of the process. You're supposed to see the wrong thing. Okay? How many wrong things did I have to see before I saw the right thing? Oh my God. I can't even tell you. There's no way I could count. But you have to see the wrong thing, and don't ever feel foolish to open your mouth and speak. I joined a Bible study recently, and every week we get together and we have to share our thoughts. And I'm entering into a new world with new ideas and with a different perspective than these people that have been doing it for a long time. But I speak up. I speak up. I don't want to be that guy that sits in the corner and be like, I don't really want to be looked at as like I don't know my thing. No, I'm the new guy. I'm not supposed to make sense. And if I get a little bit here and there, people are going to applaud that and say, oh, look at the new guy speaking up. No, speak up. Don't hold back. Don't feel, don't be scared to open up. You have to open up. This is how you learn. And you get a lot of good feedback when you open up and you make mistakes. You get a lot of good feedback, because then somebody can step in who has the knowledge, who has the logic, and they can say, all right, I see where you were thinking to get you that conclusion. Let me suggest something, say something, show you something that will spark something in your mind, so that next time you do the analysis, your logic will be just that little bit different. And you'll see, you'll be more closer to truth than not. All right. All right. Good session. I'll leave with that. All these sessions will be made available and they will be uploaded in the forum. Okay. All these classes will be in the forum. So for instance, when you come under here, let's go back from the beginning so you'll see how to get here. CFTC data study sessions, you click on that. Then you go up here. CFTC study sessions for 2025, you click on that. And it's February, you click there, scroll down, the class will be posted here. It'll be in sequential order, and you can, if you come and you want to watch it from the beginning, you can go oldest sessions first. And it'll list the oldest ones to the newest ones from top to bottom. If you only want the latest episode because you just missed the latest episode, then just go to newest and it'll list you the newest episode. Okay, but it'll all be here. All the videos will be in the forum, all for you, recorded, every single one of them. And congrats to our scholarship winner. I posted his name on, at least his Twitter handle, on Telegram. And yeah, so hopefully you're watching this today and getting something out of it. Okay, guys, thanks. Amazing content. Thank you, Paul. Appreciate it. I'm going to continue to do my best to transfer this knowledge into your minds. All right. Thank you, guys. I enjoyed it, and we will talk to you guys soon. You take care.